Nissan Joseph is the CEO at Metro Brands, now joining in. Thanks so much for taking time out. Good interacting with you again. What is the outlook? First up, when it comes to the quarterly numbers, because it's been well below what the street was penciling in, do you think that Q2 will be fairly similar, or this was an aberration?
So I think when you look at our performance in Q1 over the last couple of years, right? 2 years ago, we were up 250 odd percent. Last year, we were up 12%. And so we're going against a huge base for one. But the other bigger reason is, in this quarter, we didn't have any wedding dates. We had very few wedding dates compared to quite a few last year. And these shifts happen in a calendar from time to time. So, we knew this was happening, which is why we doubled down on our controls and our expenses to make sure that our PAT came in line. We did not get crazy and start discounting. That's why you see our margins in line as well. So overall, I think it's a little bit of an aberration quarter that we would definitely come out of. And when I look at our sales through July and August, we're seeing that rebound starting to happen as we predicted.
Growth is coming from your licensee brands, which is that the non-Metro but licensee brands which are part of the company.
What about that? I'm sorry, I missed your question.
Growth is coming from the licensee business, the license business.
Correct. How much is coming from it?
Yes, please.
Yeah, so I mean, we don't break out those numbers distinctly, but inside our stores, as we've shared in the past, we do below 30% of the business comes from outside brands. That, of course, doesn't count Crocs and what they do themselves. And then, of course, we now have Fila as well. So I would, if you start to extrapolate that number, it could run into the low 30s overall. In a sense, that's a good part of our business, the fact that we've been able to keep it maintained at the 30% mark overall, which is what helps our gross margins as well, but it also helps our sales. And, these licensee brands as a percent of business will continue to grow simply because we have acquired Fila, which is a licensed brand. We have acquired the rights to open Foot Locker, and we recently announced that we've acquired the rights to distribute exclusively the New Era headwear category in the country. So you will see that number start to increase. However, when that increases, unlike the past, when we used to sell those licensed brands in our stores, these brands will not be margin dilutive to us.
Okay. Good to know. So you talked about the fact how there was a bit of a timing mismatch in Q1, but given the fact it's just that maybe Q2, Q3 will be substantially better. And the fact that July started on a positive note, how much growth should we anticipate in Q2, Q3? Is it going to be high single digit? Could it be better than that, low single digit?
Yeah, I think all retailers wish they had that perfect crystal ball that would nail it down to a quarter. I think what I would feel very comfortable, and we always have felt comfortable, that over a period of time, we guide to 12 to 15% CAGR growth. It's a number we've maintained for many, many years, although we've blipped up and down a little bit, and this is one of those blip downs. We're confident that, we'll get back to those numbers relatively quickly. And so we see no reason that it happens. Don't forget, there's a lot of distraction to the discretionary income that's there, right? Whether it's you've seen the sales of secondhand cars and you've seen the sales of air conditioners, and travel is booming. So there's a lot more, discretionary spending dollars going to multiple aspects. However, we don't believe that we should not be beneficiary to the growth that's happening all over India.
The footwear market, not just Metro. Let's say I looked at numbers from Bata, I looked at numbers from some of the other peers. The footwear industry is going through what could be called as a slowdown. Now, this is like an entry-level, low-ticket item, hardly gets affected with slowdown. Why is that?
Yeah, so like I mentioned, I wouldn't call it a slowdown necessarily, right? So I think I would say that the customer's done a couple of years of what we call revenge shopping, or, wardrobe refreshes. And, they've been through that entire cycle. 2 years ago, we were up 294%. Last year, we were up 12%. At some point, I wouldn't call it a slowdown. I would call it more of a normalization that happens. But I think this quarter is an aberration. When you look at the number of wedding dates, especially in May and June, it was 0 this year compared to 11 each month, I believe, for the last year. That's a significant number to offset. And that also has a lot of ancillary spending. So it's not like people are just buying wedding shoes. They're buying shoes refreshing the shoes to travel to the wedding and all the things you have around it, right? And then it didn't help us at all, but though we support it very much, was the fact that all our stores had to be closed one day through the quarter to support the elections, right? So these are things that happen in a business course of time. We don't see too many of those headwinds coming up for us in Q2 and Q3. But that doesn't mean business jumps right back to normal, but it's definitely, from what we can see, it's trending back towards that.
Where is growth contracting and where is growth expanding within your gambit of stores and within your gambit of geographies?
Yeah. So the good news is, we see premium expanding still. We see our Crocs business expanding. We see the casual and the athletic business expanding. Those are all areas that we're seeing good growth in. Where we really got a little bit hit was our wedding wear, which is a significant part of our Metro Mochi business. It is not as much of a part of our walkway business or our Crocs business. So we were able to offset some of the business there. So it's very much on trend, very much following the trajectory that we would expect it to follow, right? So, we're not seeing anything abnormal, but we're seeing some good growth categories that, as you know, we're poised well to take advantage of in the future.
All right. And just a quick word then, when it comes to your overall inventory situation with the BIS norms in place, has that normalized?
So the norms are in place, though it's not fully the update hasn't come out fully. It'll start to normalize. We had an extension till the end of July. So we were bringing in stock to stockpile up to make sure we had enough of a runway to get past it. And from where we sit today, our core business of Metro Mochi and Walkway, we're well covered for, even with the new norms and all of those compliances that are required. So we feel very good about that, so we will start to see inventories in those three businesses continue to get in line with our goals. The business that I think that's always going to have a little continuing issues are, the international brands that we gotta have to monitor closely to see what the final notifications are from center.
Given the fact you're anticipating a favorable mix in your product sale going forward, aka more wedding sales, would that mean that the margin will go back above the 32% mark?
So, we don't anticipate the wedding business to come back again till November. That's the next wedding dates that are out there in the market, right? That's number one, right? Number two, we've always guided to EBITDA north of 30%, right? So 30 to 35%. It blips up and down. Even last year, we were at 33%. This year, we're at 32%. So it's not like it's moving tremendously. We're very confident that we would stick to that range where EBITDA is north of 30. We guide that our PAT will be somewhere in the 15 to 17% range. The EBITDA will be north of 30. And I'm very pleased with the performance of the team that they've been able to deliver to both those numbers despite a challenging quarter.
We wish you all the very best for the coming quarters. Thanks so much for taking time out and joining in and giving us that perspective on where Metro Brands stands right now.
If you like this video, then like, share and subscribe to ET Now.